Good morning, traders, and welcome to the Place Your Trades Network. I'm Anthony Crudele, and today my co-host is SPY options trader, Swing Pony. Today, Pony and I are going to chat about how we're trading today's action following this morning's PPI numbers using event contracts. Today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts. This is what we're all using at Place Your Trades. You're going to see the app here in just a little bit. When Pony and I go over some of the trades that we're looking at for today's action. You could use the link in the chat to start using the Tradeovate web app for free so you could follow along and eventually, if you're interested, make your own picks. The Place Your Trades Network is live Monday through Friday from 9 a.m. to 9:30 and also Sunday nights from 6 to 7. So make sure you like and subscribe to our channel and set those notifications so you never miss one of our podcasts. We really appreciate it if you do that. And now let me get in my co-host for today.
Hello.
Pony. What's up, Pony?
How are you? How about that PPI print?
I know it's, I was watching some of the stuff that Shy Girl was putting in our Place Your Trades chat this morning, and I didn't do anything on the number. These numbers, when they start moving the way that they are, it's almost like I'm just almost watching it with the chart without the dome. So I don't even trade it because it's just the action. I mean, remember from that CPI, you're just going to click in and it's going to be nothing but trouble. There's no way you can manage risk. But bottom line is everyone just thinks that this inflation is just going away. And it just feels like everyone's chasing the market higher now.
We have a very short-term mentality, I feel like, in this market. You get a few green candles and you're like, bullish, we're going for all-time highs. You get one red day and you're like, oh no, we're going down to the lows again. So it's a very, you have to kind of have that short-term memory and, just kind of take it day to day because you just never know.
No, exactly. I think what we could do is start off when we get a little bit technical. Let's actually pull in. I pulled up some charts here today, and there's a few things that you and I were talking about pre-market that we thought were important. And we have the ES up here because the ES is really, the market that everyone's really mostly trading when they're looking at stocks. I know you trade the SPY, but now you're trading the ES with some event contracts. We'll get to that, of course. But the one thing that you wanted me to pull up is this trend line right here. And that's not too far away now. It's 40.92.
That's the funny thing, just a couple weeks ago, it looked so far away and it looked like, it would take forever to get back there. And now we're very close to that trend line. So I think a lot of people are watching that and we're very curious to see how price is going to react at that level. We do have end of year seasonality. We do have, the whole midterm situation, which typically tends to be bullish. So yeah, that's a trend line that I'm really watching to see how the price reacts at. And then another area that I'm watching as well is the 200-day moving average. So I think for ES, that puts us at about
it's almost 40.80. Yeah.
About 40.80, 40.78, 40.80. Yeah. So we've got some pretty key levels coming up to keep an eye out for.
Yeah, you look at this, and I also added one thing to the things that you asked me to pull up. So the red is the 200-day moving average, which pretty much everybody, as you know, we keep it pretty simple on this show, knows what a 200-day moving average is, just 200 days average of price, the big downtrend. And then you also have what I did is I auto anchor a VWAP. That's a volume weighted average price from the opening price of the year. And that comes in right at the 200-day moving average. That's actually the one that's at 40.80. The 200-day, you're right, it's at 40.78. So you have this range from 40.78 to 40.92, which I think becomes, I hate lines in the sand, but that area to me, if that area doesn't hold as resistance, boy, I don't know. Tony.
Really go.
It could be just a big squeeze.
Yeah. No, that's definitely a heavy area of confluence. I like when you have multiple things stack up because that really just gives you more conviction, whether it does serve as resistance or if we do move over it. So yeah, I think we have an exciting end of year ahead.
Yeah, you mentioned the seasonality. November, I think actually our Place Your Trades Twitter, which is Penny. She does a lot of that Twitter.
Penny.
But she put out something about November, I think was like what is normally the most bullish month of the year. And as we all know, we always know that the end of the year, typically in stocks, a lot of times it'll be bullish. Not always in bear markets, but you have a time of the year where, the market will tend to go higher. more times than not. And you have all of this news coming in, and it's interesting because I think we're at this time. It's an interesting part of the year because when you come off of a year that was really volatile, it shook up a lot of people. I would almost guarantee that some people really did very well, or some people just did very poorly. And then you have,
Oh, yeah.
right, because it's just a year was so volatile. And maybe some people start to do some chasing that were either kind of sitting on the sidelines or people that maybe were struggling. And all of a sudden now, like this FOMO of this type of rally can start kicking in.
Well, that's the thing that they say about bear market rallies too, is that they can really mess people up because sometimes they extend so long that, trading's a big mental game. I mean, that's
Totally.
more than half the battle. I mean, it is self-discovery all the way. But, a lot of people through these very intense bear market rallies will convince themselves that like, oh no, the market's like full on bullish again. And so, yeah, no, I think it's very easy to see that we're, going in on a run and everybody tries to jump in when the move might be a bit extended. So yeah, I think definitely got to still manage your risk and hedge. It's very easy to have that bias just make you want to go all in on either, a bullish direction or puts, but at least hedge. I mean, you just never know.
So a couple of things I want to talk to you about before we go and we pick some trades and what we're looking at for today. We already kind of laid the landscape out technically what we're looking at. We're not looking at any resistance here, right? We got another powerful number or a rally off of a number where people just think inflation's just, going away, right?
Right.
It's funny, like when you really look at these numbers, when you look at the inflation number, maybe
My groceries would beg to differ, though. I'll tell you that. My groceries would beg to differ.
Right. And I don't think anybody's feeling any sort of impact in mainstream America, reflective of what these numbers are saying. But of course, we all look at it from the Fed's perspective. Maybe the Fed is close to stopping raising rates, and that's a lot what's driving this. But you're a SPY options trader who's now looking at event contracts. We just went over the technical things that you're looking at. You've got some resistance up top, but we do kind of think that maybe because of the things that we're seeing, short-term bullish to test those areas. Normally you as an options trader, how would you go about trading that right now?
So right now, when you have such a big move off of open, I always try to be a little bit careful because you just never know. I mean, we've had days like with CPI where you get a massive move one direction and then we go the complete opposite direction. So I kind of like to let the market digest a little bit. But yeah, I mean, today I'll kind of be watching. This is the kind of move that, like, I actually think event contracts are great for before the move happens, because that way you could do a strangle and really be probably profitable in either direction because you are anticipating such a big move and we got that.
Yeah, I mean, I think that's the interesting thing is I think that's also why I was so glad to talk with you today on a day where we have data is because you as an options trader coming into this day, it's already setting up. It's going to be a difficult day, right? Because you're day trading options, which is what a ton of people have started doing over the last several years. It's crazy
Oh,
to
yeah.
me. I've been a futures day trader my whole career. I've never really day traded options. These event contracts are what I'm using now, which are just daily options, but I've never done that. So I was kind of curious to how that transition's gone, because what's interesting is, and we'll pull up the event contracts now, as we talk about what we're looking at in the bigger picture. And like you said, it could be really tricky to trade that as an options trader when you come in with this big gap up. I mean, the Nasdaq's up 320 points right now. S&P's up 70. I mean, we've seen these types of days up or down, gapping up 1.5 to 3%. But with the event contracts, you talked about a strangle. We all know that Anne Marie on this network is always talking about the strangle. She's taught all of us really on the way she's been approaching this. Explain to everybody real quick what a strangle is.
So you can buy a call and a put. If you feel like you're stronger in one direction, that would be more of a hedge if you want to buy more calls and then buy like a put to potentially offset it. But a strangle would basically be equal. And so what you're accounting for is a massive move in one direction. And so what that'll do is, even if one side you're losing on it, the side that you win on is going to more than accommodate for it in this situation when we have such a big print.
Got it. So let's go back to the chart real quick, and then we're going to talk about some picks and how you would approach trading a day like today, even though I know that you said a lot of it will be done pre-PPI, but let's talk about maybe how we would directionally trade them using event contracts. So first thing is, everybody, we went over this. We've got a big downtrend that comes in at 40.92. 40.80 is the anchored VWAP for the year. And then 40.78 is the 200-day moving average. Right here on the basic technicals that we're looking at, there's really nothing there. It's a news-driven day. Everybody's looking past this data already, thinking Fed is, most likely not going to be raising as aggressively. I think that's really the mindset, right? So us as traders, we come into event contracts. Let's pull up the ES, okay? And then maybe we'll go to the strike list. And so this strike list is going to show all of the event contract strikes. Typically, there's going to be quoting 5 of them around the at the money. So it'll be the at the money and then 2 above, 2 below, which are pretty wide. They're 25 to 50 points wide around. So, Pony, one of the things I want to let's go over. So when you come into a CPI or PPI, you're looking at the strangle, and essentially what you would do is what?
So I would get a look at like where we're trading. So before the CPI print, let's see where we were. One moment.
I believe we were around 50 handles lower. Yeah. Well, now we were about 30 handles lower.
Yeah, and we were actually trading pretty strong. Like we were grinding back up before the print. Okay, so let's see.
So we were probably right. We were right around 4,000.
Which has been a pretty key level. I mean, we definitely struggled with it yesterday. And then that next level was the 40.17 that we were seeing a lot of resistance with yesterday. So, going into CPI, you could definitely do like a 40.25 yeses to that, or to 40.50s if you want to, get something a little cheaper, a little, maybe higher risk reward.
So you buy the yes above, a little bit out of the money. And so everyone, just so you know, yes is a call. Yes, it says yes, but yes is a call, no is a put. So you buy the one that's above the current trading price because you're expecting volatility, right? So you buy the yes because at this point it's trading 6.75, but at that point it was probably trading somewhere around $4, maybe $4 or $5, right? So then you pay that $5, and then then what would be the next thing you'd get?
So then I would go the opposite direction, and I would maybe look at the 39.75s. It is a little bit more high risk, obviously, but that's the thing with, CPI, PPI, FOMC, these big events, is you have a little bit more room to go out of the money if you want to kind of have that bigger risk reward, because you're anticipating for the move to accommodate for that. So I would maybe do some no's under 39.75.
And then essentially what you look for is if the market spikes above or below one of these prices, at that point, then you either take the other one off and then you leave that one on.
Yeah,
That's how
absolutely.
you do it. So you just you basically take one of the legs off, and then you kind of just say, well, look at this one so far in the money now, or potentially in the money. You can then that's the trade that you take.
And that's what I like about these event contracts is, look, the one thing that's universal in trading is sort of like buy high, sell low. No, oh my God, opposite. Buy low, sell high. It's still early here. Yeah, buy low, sell high. So that's what I love with these contracts is, if I can get something for $2 and then it goes in my direction, the way that builds up, like what are our, look at the 40.50s even. Those are
It's actually pretty cheap to buy the 40.50s today. You look at it at 6.75. So let's talk a little bit about how we would approach today's day. For me, on a personal level, so that's how you would do that strangle coming into the PPI. And then when
before the PPI.
So now you were sitting here and you see the market is starting to come off a little bit, and it could be a big part of it is because technically we are getting near these big resistance levels. So now you're faced with a decision of, did we hold these levels or are we going to continue to test these levels, right? Because we got pretty close to them, but we haven't truly tested them yet. So now you have to make a decision. When I look at a day like today, for me, because of the way that PPI came out, because of what's happened with CPI, I look for any sort of pullbacks today, and I just start taking yeses. Because to me, I look at it like this. I'm actually going to use this day with the event contracts is just almost a way to buy support, right? So I would go to any sort of pullback around where that number came out. And to me, that's going to be a critical level. Like you even said, that 4,000 level. So instead of just being an outright futures, I can buy the yeses there. So that would be coming in around the 4,000 level, which right now it's priced around 16 bucks. I think, that's not average, just so everyone knows they close at $20. So you're paying 16 bucks to make $4. I don't love that right now, but any sort of pullback into these areas, I
Mhm.
start taking yeses because I do think that we do eventually test those areas. And it's hard to see a day like today for any real reasons to pull all the way back and potentially make lows. But this is an inexpensive way for me just to be long and kind of just
Mhm.
walk away from it if we were to get down there. How do
Yeah,
you
and
think?
then a level that I actually really love is that 4017. It's where we struggled yesterday, and it's actually, let me see, pull up my
So the
chart.
4017 would almost be caught in between two places, the 4025s and the 4000s. So what's
Mhm.
interesting is, let me just actually pull up a 5-minute chart just to get
Like,
something.
I would want that to hold as some form of support today, ideally, but yeah, longer term, definitely 4,000 is a very, very key level.
And so here's the line that Pony's talking about. So pretty much yesterday's highs. If we go down there and scrape and hold them, then you step in. And that's where, see, that's to me where if something like that holds, then you could even look further out to like 4050s. Because if
Exactly.
that area starts to hold, that would be a cheap yes, right?
Mhm. Yeah,
Because
and that's what I really like is being able to load up on those. And one of the things I learned, with the event contracts, just with, playing options is you don't have to actually get in the money to sell, right? Collect the premium, scale out along the way, because you never know, if you're going to get that actual close or not. So, if you bought something at $3 and it's gone up to 12, lock some profits along the way. That's great.
yeah,
Yeah.
100% move. And that's the one thing I think as an options trader, when I go to someone like you, like a day like today, if we were to pull back to that 4017 area that you like,
Mhm.
I know that you've used to using SPY options. If you buy that SPY call, whatever that at the money would be, like I'm not a SPY options trader, so I don't really know how they're even set up in the strikes. But if they were to get down there, and let's just say you bought that's at the money, and the rest of the day it kind of grinded and sat there, and maybe it closed just above that level. Where do you think your SPY call position would be at the end of the day?
Look, that's the thing with options, especially when you're dealing with 0 DTEs. I mean, if you're trading SPX, or if you're dealing with weeklies, is that your premium is not gonna like grinding, slow grinds, not a fan, consolidation, not a fan. And that's what I do like about the event contracts is that that's less of a concern for me. So one of my recent issues with, day trading is that I work a full-time job. And so if I'm slammed with work and I can't manage or babysit a position, my premium could be an absolute mess. I could really quickly miss the big moves. It gets a little difficult to be like very detailed and hands-on with the market. And that's what I like about the event contracts is that I can still participate. I can have that day-to-day interaction, but I don't feel like I have as big of a risk doing so.
Yeah, exactly. Because at this point, when you buy an event contract, some of the perks are if we pull back in that area today, like we talked about. I'm
Mhm.
actually long some Russell right now, yeses and some futures. But what I like about it is for those I have to keep watching them. For the futures, for this, I could just walk away. So if you do have a job, you have something else going on, you can trade your bias of direction with these because the stop is baked in. So if it's $6.75 for the 40/50s, that's what you pay. You could buy one, you could buy 250 of them. I mean, that's up to you, right? So
Yeah.
you could buy as big as small or as small as you want, and your risk is baked in. But what's interesting is going back to what you're saying. So let's just say on a day like today, let's make some calls today. So what we think, Pone. I'm calling you Pone, Pony. You got to
Oh,
Pone.
swing Capone, I like it.
People call me Tony, and then they call me Tone. So it's like kind of
You
I'm
know
going.
what's funny? My degenerate SPX 0 DTE name is, Pony Montana.
That's great. Um, so do we think we close above 4,000 today?
I think we do.
Right.
Yeah,
So
I think we do.
there. We like the 4,000, but the one thing that's different from what you would do at your SPY options in this is if it closes one tick above 4,000, it pays you $20. And I think
Okay.
that's an important aspect for people to understand is that with these options, you don't have to worry about how far the market goes. I mean, let me ask you this. How often in a day, and let's just say these go back to 4,000 and you buy them for 10 bucks. How often in a day have you bought an at the money call and you doubled your money?
At the money, not as often. It's usually sort of taking higher risk and going further out of the money, which
Exactly.
can be hit or miss. I know so many people are fixated on like the massive SPX gains. They come. I mean, I sold some SPX puts way too early yesterday. And let me tell you what, that's actually one of the things I like about the event contracts is I know what my risk is and I know what my max reward is. So I know no matter what, like the peak of what I'm going to get off of each contract, let's say $20 is what it's going to close out for. With options, there's a little bit of difficulty in terms of like wanting to hold out for more, especially with SPX, especially with zero DTEs. You know, everybody should scale out along the way, but sometimes you're like, oh, maybe just a little bit more. Let me hold on. Let me hold on, and then the whole move is gone and your premium's wrecked. So what I like here is I don't have to, like, if I'm trading at like $17 at this point, I can start to scale out because I'll be like, okay, $20 isn't that much further away. So why don't I do the right thing and scale out along the way instead of banking that it's going to close at the strike that I picked?
Yeah. No, exactly. I mean, this is one of those things where, people every day are asking us, more and more about why we're talking about these. If you're a newer trader, if you're a trader who has a job, if you're a trader who wants to express their opinion on the day and doesn't want to be micromanaging their futures, which everyone knows that I do both, this is a great way to be able to participate in the market. And I just think it's one of those new tools that we're trying to showcase on how people could use these in their strategy. And I think a lot of the SPY options traders, I think a lot of those traders that have come new into the market over the past, let's just say 3, 4 years, or the COVID kind of people that have come in during that time, this is a product for them where you're not going to get blown up as quick as you are day trading those other options. And of course, anything could happen because you could trade as big or small as you want with these. But I think the one thing that's extremely important is that with this, whatever your risk is on there, that's what your risk is. You can go in, you basically buy the trades. You're
Yeah.
buying the trades, which is different than when you're trading a leveraged option, right? Because that now you have to really be, you're trading, like I said, just something that's leveraged versus something like this. Whatever the cost is, that's what the cost is. So I think for people to exist during a time that's very difficult, let's face it, I've been doing this a long time. This is an easy time, right, Pony?
Yeah,
It's
how do you feel about the market, like, as a veteran trader, like, what we've experienced this past year?
What I feel is I think the beginning of the year was really good because we were really on top of what was happening with the Fed and raising rates. So it's a reverse bull market. So I thought it was very clear. I think when you started to get into towards, I would say, the beginning or the middle of the third quarter, I think it started to really just get very difficult. And you look at even now, like towards the end of the year, like the CPI number, how do I click in on that day? I mean, you can't trade that day. I mean, I've been doing this a long time. I look at that day, I watch that spike. I'm like, what
Yeah.
what am I supposed to do?
Sometimes you just have to let it digest. Yeah,
Yeah.
you can't be a part of every single move.
And these day-to-days are so important now that it's like I look back at it and I'm going where I want to be in and where my risk is.
Mhm.
Sometimes it's so wide that it's like I have no way of participating in a lot of days. It takes me out of the action, right?
I'll
And
be honest with you, when I learned about event contracts, this whole year for me has been a really big on like patience and discipline and not over trading and fully accepting when I can tend to a trade and when I can't, and stepping away when I can't, or if the price action isn't there, if we're range bound, really just being more disciplined in terms of how actively I have to participate. Because I think one of the bad habits with COVID era traders is that we feel like we have to trade every single day, every hour of every single day. And I think that's such a bad habit. And so when I learned about event contracts, I was like, I really don't need one more thing to trade. Like, I'm actually trying to do the opposite. I'm trying to step away. I'm trying to be a lot more selective and intentional. But I was actually delightfully surprised because I do feel like they're a really great way to participate when you can't be as hands-on. And I
Exactly.
just love them for big events like what we have today.
Yeah. I mean, I like them the most on event days
Mhm.
because it allows me to have skin in the game without having to, like I said, micromanage, which we all do when we have our positions. We're constantly watching them. Some people will say, "Oh, just put your
You have to.
how could you just put your stop in when the S&P is moving 50 to 100 points? I'm moving my stops up. I'm not
Yeah,
moving worse against me, but I'm trying to protect and manage risk as best I can, right?
yeah,
And some of my stops for my strategies are so wide that I look at it and go, well, I mean, how often do I want to step in and have a 25 to 30 point, risk in the S&P? And I have to get 25 to 30 points of that to be able to be at a one equal risk as reward. So sometimes I look at it and go, this is just not a market for me. Can't make money here. Like I do think we're going to go and test those higher levels. So I'm going to buy yeses, and that's the way I'm going to approach it. So it is.
yeah.
It's great to hear your perspective from it. We're getting ready for the opening bell today, so we're getting ready to hop off. But it's so glad to have you on the PY team talking about this. It's great to hear the perspective of an SPY trader, also someone who has a job and who comes in and who wants to be involved in markets and the way you're approaching it. And we look forward to hearing more from you, of course, on this network. So thank you so much for joining us today, Pony.
I mean, good luck today.
Yeah, good luck, everybody. Remember, if you enjoyed this podcast, give us the thumbs up. I see a lot of you in there. Give us that like button. And it was great to have Pony in here today. Click subscribe so you never miss an episode. We will be on tomorrow morning. I'm actually going to be on tomorrow morning with the OG for the Strat. So we're going to be talking about the Strat tomorrow. And I expect another busy day. Make sure you go to placeyourtrades.com. Follow us on Twitter at placeyourtrades as well. Have a great trading day, everybody. See ya.
Bye.